What's up, guys? It's the weekend and Bitcoin has made all-time highs. But have we missed a chance to go long? Nope. In this video, I'm going to break down my technical analysis of Bitcoin and how I'm going to take a long position. I'm going to go through the 3 different strategies I'm using to analyze Bitcoin, and I'm going to show you how all 3 of them in confluence has given me the same setup. I'm going to give you trendline analysis, smart money concept, and Elliott wave theory. So you're getting 3 for the price of 1. So without further ado, let's go. Hi guys, it's Enny, aka the NocTrader, your friendly neighborhood swing trader, back again with another video. Remember to hit that like button, hit that subscribe button, and hit that alert button to get alerts on all my latest videos. So it's Saturday the 13th of March when I'm filming this, and Bitcoin has made all-time highs. So gone are the days when I would do something stupid like take a long here. But what I see is a great opportunity to take a long, but somewhere else. So I'm going to put my neck on the line and give my prediction of where to take a long in this bullish Bitcoin market. Time will tell if this is a good trade or not. But when I made bold claims like I did with the crude oil over $50, we all know how that ended up. So I'm trying to make one of these big boy trades again. So without further ado, let's get into it. All right. So first, we're going to start with smart money concept. I'm going to start with the smart money concept technical analysis. So as we can see on the daily chart, everything is trending up. It's a bullish market. Get no extra points for identifying that. It's very obvious. Obviously, it's broken all-time highs. So now I'm going to go down into 4-hour chart. Now in the 4-hour chart, what I can see here is that there was a previous order block here on the 4-hour chart that was respected for some time, but then it got broken through. And then as you can see here, there's been an impulsive move. That breakthrough that made the all-time high was an impulsive move. It's a really sharp move, which has left behind an order block here. So this is now the new 4-hour order block to react from. As you can see here, this is kind of like the breaker structure, and this is the 4-hour order block that it reacted from. And if you go down into a 1-hour chart, you can find a more refined 1-hour order block. I've actually plotted these lines up before, and I'm going to show you the ones that I plotted up before. So let me delete all of this, and we can go into the ones that I plotted up before. I'm moving that art attack. Here's something I made earlier. So as you can see here, this is the 4-hour order block that price reacted from. We got rejected from before it eventually broke out. The impulsive move has been made up, and it's made a new breaker structure. And within the 4-hour order block, there's another 1-hour order block, which is more refined. Now, what I've done here is that I've gone down to like the 30-minute chart. And if you zoom in, I'm trying to identify where would be a great place to take an entry. But in reality, I'd probably wait for price to react against this 1-hour order block, then make higher highs before taking a long. But this kind of area here, this 30-minute order block and this 30-minute order block would be a good place to take a risk entry, but I'm not going to take an entry there because I want to see price react off of it, come up, make higher highs, and then move off. So I'd want to see something like this. I want price to come back down and make high highs, and where I'd want to enter is around this area. This is the area I'd want to enter, because then it would really confirm that prices continues on the bullish move, and I can make a more refined entry and have a tight stop loss. But just to show you what I mean, I'm going to show you a previous order block that price reacted from and how I traded that one. So as you can see here on the 1-hour chart on the 1st of March, Bitcoin price made an impulsive move up, which was a breaker structure. As you can see here, once again, I'll mark up the breaker structure for you. I think it was here. So that was the breaker structure. Let me show you. That was the breaker structure, and then price made an impulsive move. On the 1-hour chart. So this is the order block. This is the 1-hour order block on the 1-hour chart. Price eventually came back to price eventually came back to react against the 1-hour chart. So now what I could have done was just taking a risk entry here, but the best way to take an entry would be to wait for price to make higher highs and then retrace back and make a second confirmation. So as you can see here, this is another order block that has been created. So then you can enter a long from here. And then just go to the moon. And then after that, you know what happens next. Bitcoin carried on going up. So if you had taken a long from here, that would have been a great trade to take, and that would have, you could potentially have made, if you make the stop loss real tight, because at the end of the day, you don't expect price to go below that order block. If it does, then the trade is invalid. So if you made the stop loss real tight, I didn't actually take this trade that I'm showing you, but this is kind of the type of trade I want to take onwards. That would have been a 17R trade, which is pretty good in just a matter of a couple of days. So that's the strategy I want to take for this order block. I want price to retrace back down to the 1 hour order block, tap into the 1 hour order block, and then make high highs. And on the first high that I see an opportunity to make an entry in, I'll take a long. And then I'm not sure where the target is yet, but I'll give you an idea of where my target is with the next strategy. So I'll show you the smart money concept strategy as to why I want to take a long at Bitcoin. Now I'm going to show you my normal trend line strategy. So here's some trend lines that I've marked up previously. Some of them have no relevance, some of them do. But initially I thought that the Bitcoin could potentially sell off here. Now what I saw was that there was like a converging wedge forming. And before the breakout, I wasn't sure whether it was going to break out to the upside or downside, which is why I didn't take a trade. Because yeah, if you're not sure, don't take it. You're better off not doing anything. But yeah, it ended up breaking up to the upside. So now that I know that's broken up to upside, trendline convection should say that it should pull back, retest, pull back at some point, retest here, and then start making high highs again. So independent of the smart money concept, I'm seeing the same strategy play out. Price is broken out of the converging wedge, made new highs, should at some point retrace back down to this area and then come back up. And lo and behold, if it retraces back down right here, this would have you in the same area as the order block that I identified in the smart money concept. Now, it's not necessarily means that it would go exactly down here. It could go a little bit further. I'm not sure about the time frame, but if it goes down here at the point at which these two lines intersect, then you'd find yourself on March the 14th at 2 a.m. Price would have retraced back down to the order block, but we don't know if it's going to come at that time or day. I'm not here to predict time or day. I'm just here to predict price levels to trade from. But this is what a break and retest strategy would look like, just focusing on trend lines. Very simple concept: converging wedge, making converging up to a point, breaking out emphatically, coming back, retrace back down to this line before making new highs. So that's one way to trade it just from a trend line perspective. Very simple strategy I used to trade a lot. Obviously sometimes you get some fake outs, but this one looks, given that we all already know that the Bitcoin market is quite bullish, this is quite a good trade that you could potentially take. Okay, now last but not least, this is probably going to be the most complicated one for me to explain, but I'm going to show you how I'm using Elliott wave theory to identify an entry point for my long on Bitcoin. So Elliott wave theory shows that the ABC wave is normally like the correction wave, followed by a 1, 2, 3, 4, 5 wave, which would be the impulsive wave. Now I believe this is the ABC corrective wave. By no means am I a professional Elliott wave. I'm in my infancy, but I do understand it a little bit, enough to think I could make a decent analysis. If I'm wrong, guys, let me know in the comment section. But this is kind of where my mind is at with how the Elliott wave is working for this Bitcoin chart. So the way I've learned to trade Elliott wave is a combination of using the obviously ABC 1, 2, 3, 4, 5 Elliott wave points, and using Fibonacci in confluence with each other. So on the 4-hour chart, when Bitcoin made the all-time highs at around 58323 thereabouts, it started pulling back. Now I saw this as an ABC wave. That's A, B, C. Now the reason why I thought it was an ABC wave was because obviously it was making a corrective wave before making higher highs. Now in hindsight you can see that, but also because of the Fibonacci levels all kind of lined up. When I did a Fibonacci retracement, or extension more like, from the A to B wave, lo and behold, at 61.8 or 0.65, which is the golden ratio, that's exactly the point at which it found its new low before making high highs again. Which would mean that it would start making probably a 1, 2, 3, 4, 5 wave. Now identifying the 1, 2, 3 was, this is where I wasn't sure about it, but I've kind of marked up what I think is the 1, 2, 3. So I'll show you how I marked up my 1, 2, 3 levels. So as you can see here, 1 is here, 2 is here, and then 3 is about at 62,000. Now the reason why I got 3 at 62,000 is once again because of Fibonacci. Just a quick side note, the rules that I follow when it comes to Elliott wave theory is from Elliott wave forecast. This is a site that I use to kind of really try and understand how to mark up Elliott waves. So they have a specific set of rules that I try to abide by when marking up my Elliott waves. And that was the basis of how I marked up where my different levels are going to be. Alright, so here's the guidelines that I followed. I'm not going to go through them now. I'll probably make another video about them. But this is a really great way to get an understanding of how to use Elliott waves and Fibonacci and confluence. But there's specific rules that I abided by to find out where the different waves were based on Fibonacci levels. So if you want to pause this and read through this in your own time, or even go onto this site and check this out, this is a great way of marking up every Elliott wave levels. So back to the charts, I was pretty confident that I'd had the right levels marked up for my Elliott wave, because when I used the Fibonacci levels, I did a Fibonacci extension, no, not extension, retracement, I keep getting them mixed up, retracement up from 0 to wave 1, and wave 2 was exactly at the 61.8 level, which shows that it was pretty right, correct. I then also did a Fibonacci extension from wave 1 to 2, and when I did a Fibonacci extension from wave 1 to 2, lo and behold, I don't know if you guys can see this, let me make this another color. Lo and behold, the 61.8 level is just near 62,000. So that let me know that that was potentially the price target that we wanted to hit for the wave 3. So now that we have a kind of rough idea as to where wave 3 is, to identify where wave 4 pullback would be, you'd want to plot a Fibonacci retracement from level 2 to level 3, from, well, wave 2 to 3. So from wave 2 to 3, that's where you'd then plot a box between the 0.23 level and the 0.382 level. Now I've done this all already, I'm just kind of showing you why I've done it, but then let me show you all of the lines plotted, and then I can explain to you the reasoning behind all of them. So if you do a Fibonacci retracement from wave 2 to wave 3, the area in which wave 4 is typically between the 0.23 level and the 0.5 level, with the 50% level being a point of invalidation. So if price goes below the 50% level, then the Elliott wave is invalid, and it's no longer a 1, 2, 3, 4, 5 pattern. So that's why I've drawn this red line here. So anything below 54,000 is invalid, and then therefore this Elliott wave is no longer a valid idea, as I said. So I created a box between the 0.236 level and the 0.5 level, and that's kind of where the wave 5 buy zone is. So I'm going to delete this Fibonacci. As you can see now, as you can see why I plotted it, but I don't need the Fibonacci there to kind of show. So I'm just going to hide it. So which means, given the Elliott wave theory, this area is the area in which we'd want to buy to go long. And lo and behold, that area is exactly where the order block sits, and it also is actually where the exact same area where the test and retrace kind of area fits. So there's a lot of confluence going on right now. Another thing that you want to see is that with the RSI for Fibonacci, and just for extra confluence, not that we haven't got enough already, but just for extra confluence, another thing that's seen is that on the 4-hour chart, you can normally see a bullish divergence occurring at a point at which it's going to reverse on the second wave and the fourth wave. What I mean by that is you can draw a line here. So as you can see that, do you see that here? It's not the cleanest one, but it's still a Fibonacci retracement. It's still like a bullish divergence, because the RSI is making lower lows, but price is making higher highs. So we kind of want to see the same thing happen around wave 4, when wave 4 is being created. If you see price kind of making lower lows like this, let me just draw it. You want to see price doing something like that. So then at which point, when it makes that a low that kind of fits in line with all of these other confluences, that would be a good point to take a long. So something kind of like that. And then you'd want to be able to almost kind of create like a trend line based off of those lower lows that it's making. And this point here would be kind of the point at which it kind of shoots off, kind of like what it did here. So that's just another thing to look out for when you're looking at trying to take a long on Bitcoin. So I'm not gonna lie, I've hit you guys with a lot of information, 3 different strategies in one, all telling me the same thing, but I'm just gonna give you a quick recap on the different strategies I've just spoken about. So a smart money concept, we got impulsive move up, which has created a breaker structure, which has also broken a 4-hour OB created previously by the previous all-time high. You can refine the order block to make a 1-hour order block. As you see in here, I'm gonna hide this. So there's a 4-hour order block here, and then within the 4-hour order block, there's a 1-hour order block. What I'd like to see is price climb, retrace back down to this 1-hour order block, and then make new highs. I just want to take a long. You could either take a long at the 1-hour order block, or wait for it to make higher highs and then take a long just for extra confirmation. Trend line, real simple, real simple. There's a converging triangle creating, or converging wedge, whatever you want to call it. Made an impulsive move to the upside. As we all know, retail strategy for converging wedges is that breakout, come back and retest, and then make new highs. Simple as. So I'm going to draw these lines here where you want to retest and where you want to make new highs. So this is what you want to see from the Trendline strategy. And then last but definitely not least, Elliott wave theory. Probably the most complicated one of the strategies, but I see a lot of confluence with the Elliott wave theory. At the previous all-time highs, price sold off to make an ABC corrective wave. Now it's making a 1, 2, 3 wave, with wave 3 potentially being at 62,000. That's where I think wave 3 should be. If it breaks through 62,000, then I'm wrong and wave 3 is somewhere else. Then I have to reevaluate this Elliott wave theory that I had. But if price reacts to 32,000 and then starts selling off, then that would be wave 3. And if that's wave 3, then wave 4 would be somewhere between 58,000 and 54,000. If it goes below 54,000, this theory is incorrect and therefore invalid, and therefore we have to look at other trades to take. But if it stays above 54,000 and then it reacts within that box, then we're good to go to take a long. And then the next level, the minimum level at which price should go up to minimum is 66,000. I expect it to go higher than that, but that's the minimum level at which it should go to for wave 5. I've got that level there because wave 5, the shortest wave 5 can be for the most part is normally the same length of wave 1. So what I did there was I just drew kind of like a line to replicate wave 1, and then I dragged it here, and I said, okay, that's the profit target. But it's an area, it's a zone. I'm not sure where wave 5 is going to be, but either way, the long should come from here, from the Elliott wave theory. So then if I sit all of these on top of each other, the charts look real messy, but they're all giving me kind of the same areas, apart from this one. This one's expecting a big pullback as well, but they all give me the same zone at least. So that's why I have a lot of confluence, and I believe that somewhere around 57,000 is the place to take a long for Bitcoin. And the take profit, I'm not sure yet. Maybe 66, but I think it could go as far as 70,000 or even further. But yeah, 57,000 is where I think we can take a long at Bitcoin. Time will tell if I'm right, but we'll see. I'm putting my neck on the line here by actually even making this video, but I'm seeing everyone else do it, so I'm going to make my prediction and let you guys know where I think to take a long on Bitcoin and why. So that's 3 theories in one. NocTrader out.